And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show, and glad to be back here this Friday, and I will be back each and every Friday afternoon. This is the show where we put you in front of where the action is in the broader markets. Let's go ahead and take a look at what we are going to be covering today. As usual, we're going to take a good look at the broader markets, see where we stand. We are, of course, going into this nice long weekend, but we want to be fully prepared for this next, this third quarter and beyond. From there, we're going to go ahead and take a look at downtrend reversals. This has been a really favored area for me of late, with a lot of these growth stocks that peaked in price back there in February, and not just growth or technology, other areas as well, as they are starting to reverse those downtrends. So we'll take a look at some names there. Also, base breakouts. I guess I'm keeping it really short there, but as always, one of my favorite chart patterns are these stocks that emerge out of these bases, and we do have names to look at there. And then also, not only stocks that have had these downtrend reversals, there are names that are close to a turnaround. So we'll go ahead and take a look at that as well. So always, I do like to share with you some of the more important headline news that took place this past week to, again, help shape your thinking as far as what we saw last week, and then, of course, going into next week. And earlier this week, consumer confidence did come in and it did soar. The consumer is back, and we did see some very nice vibrancy in consumer discretionary select areas. And we are going to take a look at some names there. Purchasing Managers Index. Now, this has to do, of course, with corporate purchasing. We did see that index slip slightly. However, this was after this index just posted an 80-year high. So a little bit of a slippage there, not entirely out of line. U.S. unemployment, the weekly claims, they did sink to a pandemic low. This is good news. And it does have a lot to do with the fact that they are rolling back those extra benefits. So with that, individuals are coming back to employment status. Manufacturing activity still strong, but this is another area we did see a dip on shortage, not just on materials, but also labor shortage is hurting that area a little, but still strong. And then today we did get employment and the employment numbers, and we did in fact see the highest employment increase in 10 months. So all very, very good news as it relates to the economy. We're seeing little slips here and there, but overall very much in growth mode for the US. And the best news, I would argue, is the fact that the markets are not viewing that as bad news. As you may of course recall, the fact that the economy was and is continuing to grow was alarming. We're in this unprecedented period, and certainly within the NASDAQ, we did see a slippage as well as the S&P pull back here. So we're looking at a daily price chart of the S&P 500. And we can see this week's move has pushed the S&P to another new high in price. Now, we can see your outside momentum indicator, your RSI, up here above 50. However, we are now just up above that 70, which is historically an overbought position. It's not the end of the world. We can go back certainly to this April into May period, where for about 2 weeks, the S&P was up there in that overbought area. Unfortunately, it did result eventually in a pullback, likewise back here last fall. So I'm going to be keeping an eye on that. Subscribers to my MEM Edge report will be kept very up to date as far as where we stand in the markets. Are we anticipating a pullback, and when? So that's the S&P 500. From here, what I always like to do, of course, is go ahead and take a look, peek under the curtain, if you will, under the hood. And we want to see within the markets, looking at those sectors, I want to see where that relative outperformance is. Of course, we want to take advantage of that outperformance, participate in it. So within these 11 sectors, I've gone ahead and added that RSI indicator, sorted it in descending order, and take a look. These are your stronger areas right now, and I would argue communication services is in there as well. So these 4 groupings, let's just take a quick look here at this tech sector. It's a whole different picture as we compare it going back to this February peak. We did have another peak here in May, all interest rate fears, growth, inflation fears, but tech is back in the forefront. Certainly something I like to see, as I do favor these tech growth names in my work. And then consumer discretionary. I talked about consumer confidence this week soaring. We did see a very nice base breakout here in this discretionary sector. Very constructive. There's a lot of talk and actually evidence that consumers are looking to revamp their closets, individuals, and then back to school. It's never too early to, even though school students are just now getting off for the year, but back to school is another big play in the discretionary area. Let's move on and take a quick look here at healthcare, because healthcare is an area that really, by and large, and again, this is my MEM Edge report, I am all about making sure that you're in the right sector, and then within that, the right industry group, and that's going to have a big percent as far as whether your stock actually outperforms or not, is that group that you're a part of. So here we are with XLV, the healthcare ETF. We can see where it really had, for the most part, almost a 2-month go nowhere. Now, I will say my report, we were able to pick up some real relative outperformers despite the broader indices relative flatness. But this week, healthcare has sprung to life, and that's a good thing. I am going to share a couple of areas within healthcare just to tune you into where some of that vibrancy is emanating from. And I will tell you, it does have something to do with this unfortunate variant of COVID that is descending upon certain communities. So moving right along, communication services, and XLC is the ticker symbol. There are a couple of heavyweights in here that really have an impact on that group. So when you're looking at these sectors, you want to make sure that you are aware of those underlying stocks. With XLC, Facebook and Alphabet account for 40% of this index. Both stocks outperformed this week, Facebook by quite a bit, but that's going to have a lot to do. But there are other names in this internet area. This was an area that also peaked in price back in February, March, because of the generally higher multiple and higher growth prospects for some of the names within. Now, of course, we do need to also be aware of where that relative weakness is. So as we drill down to this lower right quartile here, you can see that the materials. Now, of course, a lot of that is going to be gold and silver. It did rally a bit today, but all about that, the dollar strengthening, and we are seeing a drop in these commodity type names. On the lookout for a turnaround, though. We're not quite there yet, but looking increasingly interesting as it relates to a potential turnaround. And another area that is still shifting and struggling are financials. Interest rates down again this week. Of course, that's good as it relates to growth stocks and other areas, but not so for banks. So this area is attempting to reverse. We're not quite there yet. So let's go ahead, drill down even further. We want to look at some of the sub-industry groupings behind that sector. And what we can see here is that, again, I've gone ahead and added that RSI there, and we can see that I'm going to go ahead and update that descending order. And we want again to make sure you're aware and embrace these areas that are relative outperformers with an eye toward continued outperformance. And we can see the NASDAQ, this is again all about that move into technology, is leading. And this is good news. We want to see these higher growth names being rewarded. And so very, very nice confirmed uptrend here in the NASDAQ. Of course, the heavier weighted, this is another aspect when you are looking at broader indices, a lot of those FANG stocks are actually ones that are up there at that forefront. So in NASDAQ, within technology, this is IGV. This is the bellwether software ETF, and we can see that they are continuing to march to new highs. A lot of these cloud-related software names, cybersecurity and otherwise, are really continuing to outperform. I did want to share with you some industry groups that are new. I have certainly, it's been 2 weeks now since I've been able to join you again, but I did want to point out to you some areas that are newer to this strength, this forefront area. And I believe I did touch on this going back 2 weeks because it had this nice spike here. This is IBB, the NASDAQ Biotechnology ETF. And so we can see that it is in a very nice uptrend. And I know the big spark here was the approval of the Alzheimer's drug and then a subsequent Alzheimer drug approval. But some of this more recent movement is all about a re-emergence as far as the need for vaccines. As the COVID, unfortunately, we're seeing this newer, faster moving strain that is taking hold in some places. The dollar, I don't generally put this in here, but we would be remiss to not take a look at it because of that strength. And that is hence being a lot of the commodity related stocks, energy, oil excluded, are deteriorating on that strong dollar. So as we move down, we again want to be aware of those weaker areas. Make sure you're not overweight. This is KRE, the regional banking ETF. And I did mention this, the fact that interest rates are deteriorating, not great for these bank stocks. They will be due to report their second quarter earnings later this month. So that could be a spark, but for now, very much in a confirmed downtrend. So from here, I'm going to take a very brief break and we have lots more to cover. Be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I am going to go ahead and start out by sharing with you some of these turnaround candidates, and they're going to be in areas that we've mentioned, that I've mentioned, have come into play, certainly over this last week or two. First up here is a healthcare stock, HCA. So what we can do from here is go ahead and pull up a full quote, and this is a healthcare provider. And what I did want to share with you when looking for these, I call this a downtrend reversal. It could very simply be called a pullback, but whatever term you want to use, the stock is re-entered or has re-entered an uptrend. So CA, we can see the MACD. This is your moving average convergence divergence. Let's see if I can get my drawing skills up to snuff here. And what I did want to share with you is the fact that that MACD is just now turning into positive territory, that black line up through the red, and then also some very nice volume characteristics as this is taking place. You want that volume there to give you that confidence that this upside momentum could easily continue higher. And certainly within healthcare, I will say these healthcare providers are, you can drill down into that grouping and you'll see a number of names that are showing similar vibrancy, a lot of it having to do with the new administration being amenable to the Affordable Care Act, and then also a lot of cost cutting that took place during the pandemic is now poised to help these stocks continue to advance. There's a lot of bullish talk out there for this particular area. And then while we are looking at these healthcare names, let's go ahead and take a look at some of these other stocks that are in COVID testing or actually in the vaccine space that are looking rather vibrant here. We can look at DGX. This is Quest Dynamics. Quest Diagnostics, DGX. And a big winner here into May, pulled back. But then this week, we can see that the stock has broken back above these simple moving averages, your RSI trending upward, up above that 50 with your MACD just now up above that 0. And of course, Quest Diagnostics are very involved in the COVID testing space. And this drop, as many of you may recall, let's take a look at Abbott Labs. They are a very big player in the COVID testing space. This gap down here in the beginning of June was Abbott Labs announcing that they actually lowered their growth outlook because of a trending downward of the need for COVID testing. And of course, more recently, that testing need has picked up. So we are seeing a move subsequent in that area. This is more vaccine related with Pfizer, and we can see that it also is reversing this recent pullback here as it breaks back above these shorter term moving average. Nice dynamics on the outside momentum indicators as well. See if I can pull up another couple of names that are in this COVID testing area that appears to be regaining its momentum. We're not quite ready yet. This is Hologic, HOLX, but it's certainly indicative of what we're seeing among these testers. This is that gap down in line with Abbott, and then that downtrend reversal. So from my work, I would want to see it make it above this 200-day before being further interested in that particular name. And then TMO is another stock, Thermo Fisher, that is involved. They are a very broadly diversified company, but as it relates to medical equipment, they are involved in that testing space. And it's had a pretty significant advance, no doubt about it. We are currently now poised to break out of this longer 4-month base at 520. So certainly worth keeping on your radar. Let's move on. I'm going to share with you other turnaround candidates because let's see if I can start with an area just to share with you. As a matter of fact, let's trying to get in front of some of these just to share with you. This is iBuy, the Amplify Online Retail ETF. And I did want to share with you, really coming out of that vaccine announcement, what a significant move these retailers had, and they did fall out of favor with that February peak. So this is what I'm on the prowl for when I talk about these turnaround candidates, when they've had these big explosive moves with strong growth prospects, the reopening trade, the individuals getting back out, again, increasing their wardrobes and so forth, is also pushing a number of these retailers back after having significant downtrends. So here's an example. This is Ross Stores, R-O-S-T, a little bumpy of a ride here, but we can see that this pullback here almost to that 200-day simple moving average is in the throes of being reversed at this point. We can also look at a couple of other names here that were big winners earlier, certainly into the end of last year, earlier this year, potentially turning. This is Home Depot. We're all, I'm sure, very familiar. A lot of people, as they stayed home, were improving their surroundings. Of course, new and existing home sales, record highs. So we are seeing a lot of home improvement related activity here. Home Depot, of course, did peak in price back here. I believe this was earnings related. They were not particularly bullish on their outlook, but things have shifted here more recently with Home Depot now reversing back up above these simple moving averages. You can see the MACD now just above that net neutral zero RSI, trending upward and above that 50 level. And let's see, I know I have a couple of other names that I can share with you in that retail space. This is Etsy, this downtrend reversal. Now the stock was flat here for about 2 months, really woke up this week all about an acquisition. So any kind of pullback would be anticipated given this significant 20-point move. That's a 10% advance. So, but definitely keep it on your radar as far as a downtrend reversal. And other retailers, I would be remiss to not share with you this gap up earlier in the week. This is Nike, came out with tremendous numbers, and it's all about China. That is their area. They've been talking about China. I've been listening to their earnings calls going back at least a year. They've been actually touting the Chinese market as their growth area for quite some time. And this quarter, it really showed. It came to pass. Big gap up. Of course, China's economy did open prior to the US, and we can see this big gap up in price, and this gap up that also then turns into a base breakout. That is a very bullish move, something you'll want to be aware of, certainly as we enter potentially 3 to 4 weeks out from earnings season starting up all over again. When we see that gap up, then creating a base breakout, heavy volume, oftentimes, particularly with the numbers that Nike posted and the outlook that they management guided, oftentimes that can lead to additional near-term heights. So nice move in Nike. Let's see if we can pull up one other name that I had on that. Actually, there are a number of names, but let's see if we have any that are definitely showing signs. So we talked about that back to school play and that area picking up. This is Zumiez. They are a teen based retailer, brick and mortar, as well as online. Had a nice base breakout, and that's that. Actually, from here we can segue very nicely into that base breakout concept, as there are a number of stocks. Certainly, as you can imagine, with the broader markets hitting a new high, you can anticipate we are in a period where stocks are beginning to emerge, not just the turnarounds, but also breaking back out to new highs. I'm just sharing with you some of the characteristics, the bullishness as far as high volume on that base breakout that in fact could easily point to further upside from here. So moving right along and also still remaining in that consumer space, we can take a look at a stock that did break out, and for the life of me I could not find news. So if anyone, maybe I didn't look today, but certainly yesterday I was on the prowl for what may have driven this base breakout here. But either way, it does it is very, very bullish looking here. Tempur-Pedic in the mattress space, another area that had been a big winner again as people were spending more to make their home environment more comfortable. And Tempur-Pedic did actually, I guess you could say technologically, they've made some innovative strides as far as their offering. And so we can see on yesterday's base breakout, super big volume. And again, that's what you want to see to give you conviction that further upside is ahead. Your MACD just having that black line up through the red, momentum crossover. And I also like to see, when I'm looking for base breakouts, turnarounds, I want to see a stock that has provided us with evidence that they can, in fact, experience these nice advances that in turn provide nice outperformance. So the stock is capable of that. It is capable of capturing that institutional interest that in turn would go ahead and help that stock trade higher. I did not share this one in retail, but it's a name that fits that pattern as far as being a big winner, having outperformed, and potentially in the throes of reversing. This is City Trends, CTRN. They are an urban, not quite sure what the age group is. It might be multifaceted, but we can see the stock really took off here, and it is brick and mortar as well as online. So a very natural pullback from this extensive multi-month move. And we can see that the MACD is just now poised to potentially trade higher. Get that nice breakup above that 50, that would be bullish. So this is again what I currently am on the prowl for as far as screening for those potential turnarounds and base breakouts. Let's move on because there are other areas that we can look at as far as being on the lookout for turnarounds. Home builders, kind of a tricky period here lately. I know I've been shaken out of a couple of names that look to be either cyclical, they should do well during periods of economic growth. There are 23 names in that home building space, and of those, only less than a handful are bullish, but they're trying. This is Lennar, LEN, attempting to reverse this downtrend, but do be aware of this volatility. It's once burnt, and the fact that there are so names in so many other areas that are looking vibrant, I might not be as compelled. But this is NBR, certainly one of the larger home builders. One last name that MEM subscribers will know that we were in this stock and we did get shaken out. So not sure that I'm going to participate, but it does look poised to reverse that near-term downtrend. So one last area that we can take a very quick look at as we move into the close here are some other reopening trades and areas that are within the consumer space and elsewhere showing vibrancy. This is Estee Lauder, and it is a cosmetics firm. They, again, it's all about people going back out to restaurants. We are going to be potentially dressing up more. We want to look our best. So Estee Lauder poised to break out of that nice space. We can also take a look at a stock that's in a little bit different area, but also looking compelling. This is Laboratory Corp, LH. We're going back to that healthcare. So those are the two newer areas. And I did want to share some of the dynamics, the underlying stocks that are really setting up quite nicely. So this is LH, another big winner, fitting that criteria, having that pullback, and then potentially reversing that pullback. So one last name is a retailer. A REIT. We're seeing these REIT stocks come back into play. And this is an example of a possibility. They are in the office space. AAT is the ticker symbol, 3% yielder. And take a look for that potential reversal. I'm going to leave it at that. For those of you not familiar, not already participating in my MEM Edge biweekly report, go ahead and use the link below. You can go ahead and take advantage of a 4-week trial offer for $7. In addition to that twice weekly. My big report is going to be coming out on Monday. You won't want to miss that. And then throughout the week, you'll continue to receive updates as the markets potentially shift. Everyone, have a great weekend, and I look forward to seeing you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.